Hello and welcome at Stocks Advisor channel. Here at our channel we are looking for interesting buy opportunities for US-based stocks. In today's episode we will talk about Workhorse Group Incorporated, traded at Nasdaq, ticker name WKHS. Well, Workhorse today did show a small reddish behavior, still kind of a doji formation. You can see followed by yesterday actually white doji, so it's just a white-red combination. And it's being minus 4% during the daily trade, and after hours we see a little bit positive, being at 1330, still volatile on these levels. But in general, if you look here, what is most important, we are now at the very low levels of volatility here, and at any moment we might have a very interesting bounce behavior, because in general, if you look at the trend at the lower scale, we see that after having a very nice move in June and growing all the way here, actually what we observe now was kind of a more steady growth, let's say, during a later period. And after this, we are in general in major correction. And currently, this is most important, the price level is just below this very principal support level that now worked as kind of resist. And again, if we magnify to the current levels, this chart, we see that we are volatiling around this line. Let's give it a name. We can call it actually R1. So we are volatiling around this level, R1, and it is indeed very interesting because now it's coinciding also with moving average 20, the green line. By the way, we have three moving averages here depicted. On the left, you see green, blue, and red line being moving average 20, 50, and 200. So what's happening now, it was a major correction with also big decline that we saw by end of February. Some volatilities, kind of bouncing pattern was taking place from end of February. We can see it here, slightly, let's say, descending. But now what we observe is actually kind of a small level further, and then there could be a possibility to go all the way up to actually the moving average 200, which is at this moment working as for us as kind of attractor, as together with moving average 50, which is the blue line. So if you look more carefully here, these two are working as strong attractors. They are about to form so-called magic cross town when moving average 50 will hit from the top, moving average 200, but because the price action is already low, it still might cause some volatility on this descending dark line. Let's name it actually R2, but then this might work as a very strong for us, as a very strong support. So R2 is our trading strategy, and whenever the price touches there, if we have tomorrow maybe slight decline towards the R2 line, this will be for us a very let's say a strong point to buy. So let's just mention it here. So whenever we touch this after a small decline, this will be for us the level to enter. And with this being said, actually the first level to buy will be anywhere in the vicinity of R2. Let's write it here actually. So this will be around here. So if I would write it in numbers, let's do it. For us, it will be then anything that's indicated with lines. So anything below 1185 and actually below the current price level 1290 will be for us the price to buy. So 1185, 1290. So this will be the first channel to enter. Let's say first call out to buy in these levels. Let's remove the circle. So, and then if you look in this call out, this will be very strong area to buy, because also it is following with this channel with these two lines that was formed by July as well. And you can see that although it's not that strong support, but it is there. It's R2 together with these two levels, so it might work very nicely here. But still, what is possible, if there is a very small push, it's still within the technical, let's say, expectation, but if there is a very small push, it could do a further spike, and the further spike could go all till to this level, which is a very interesting setup here. You could see it. It was forming actually during again June, July, end of June, these few candles. So they form for us another entry opportunity if there is any further decline. So with this being said, we could actually mention those here. It's this support resist level, which will form for us, let's say, the second more broader area to enter if we are going to go lower, and this would be between actually 765 to 965. So let's write this as 61, sorry, to 961. Let's write it as a second call out. So this will be therefore for us the second channel to enter. And should the price increase, of course, it's advised to take profit. In general, as I said, there is a very strong overall, let's say, target. And this is just here in the vicinity of current moving average 250, as I said. So simply speaking, this is the range between 2097 to 23. For midterm traders, this is the target for the price. For daily traders, of course, it's always advised to take profit at 10 to 15% overall. This is what we usually do ourselves in our team, and that's what we always advise in our opinion videos. For example, you can find in our channel yesterday there was discussion about XL company, XL Fleet. It indeed behaved as predicted, as analyzed, but then advice was given, take it 10 to 15% profit, and some people didn't. They waited longer, and as a result you can see the stock actually was expiring. It declined by the end of the day, so there was no possibility to take profit at all. So whenever you can take profit, take it, because profit taken is taken indeed. Until you sell, until you press sell, you don't have any profit. So take it, rejoin if needed. There are many opportunities also at our channel. You can find many videos. If not, just check older ones. You can always find something, but do it. So with these two levels, one is 1185, 1290 and 761, 961. This would be a very nice technical, let's say, trade with technical entry. What should happen if we decline further? This is also possible, but not on technicality anymore, but if any negative catalyst kick in. So any decline below this level, the level of 761, could be happening only if there is any negative catalyst or news. So negative catalyst could be there, or just simply speaking some, let's say, bad news or something like that. If this is going to happen, then we might go lower, and it's not expected to have them. We never know when they are coming, but if this is happening, it's always advised to keep some funds to average down there, because while others will be taking losses, living in panic, you will be just right in time to enter there. Because what might be happening here is a very simple decline from these levels, and then it could be kind of a parabolic move. So the price could go all the way down like this and then rebounds. And with this, it could be happening here. If any, it could be happening here as well already technically, but also similar situation could be happening if there is any, let's say, a technical decline, and then similar rebounds could be taking at the lower levels. And those lower levels to buy on the, not technical of course, but on the news. So those lower levels will be, let's designate them. It's usually the most strict support resist levels. And those are, you can see here, based on this leg formation that was again observed in June, July. I always refer to it in this stock because this was really the defining moment for the stock, and these levels therefore will be between 474 and 586. Let's write them here as well. So this will be 474 and actually 586. So this will be the next call out, the next buy opportunity for this stock. So these are three levels where you can buy, and at any one, whenever the rebound takes place, Overall profit is advised 10 to 15% from the money allocated in the position. Of course, at the lower level, this will be more money allocated in the position, but still it is advised. So that's the strategy to play. And this is part of our so-called mixed analysis, where we discuss actually the technical situation. The second pillar is discussing entry levels based on non-linear averaging down. That's what we do here, 3 levels. 3 averaging downs. And the third one is actually talking about the third level is taking into account possible negative catalyst, because as you have noted, we are not discussing taking loss or stop loss strategies. We decide it's better to trade a little bit longer, maybe extra couple of days or maybe even couple of weeks, but still exit with the profit. Because this is trading strategy where you actually give away time, but you don't give away money. When you take loss, when you do stop loss, you actually give away money, but then you gain time. It's a little bit different strategy. It's not that it's bad or good, but just different way of trading. Usually more stressful when you have to take losses, but this one is less stressful in the sense that you just wait a little bit longer and then you should still exit with positive or at least with a draw outcome. So with this being said, these are 3 levels how to buy. Still a very classical pattern. So we just buy with non-linear averaging down, 5 portions play. What does it mean? It means that money you would like to play here, you can split in 5 portions. Then you can buy with 1 portion in the first circle, first channel on the top. It's 11.85 to 12.19. Then you can average down with 2 portions of your money if it comes to the second channel. And then if there is a bad negative catalyst, it declines to the third channel. You can again buy and average down with remaining 2 portions. And speaking how to buy with those portions, do you need to buy at the top of the channel or at the bottom or in the middle of according channel? You never know when the channel will actually resolve. Therefore, it's advised to subsplit every piece here in another maybe 2 smaller sub portions, and then with one you can buy immediately once channel is activated. With second one you can buy a little bit lower. This way your average price through the channel will be closer to the middle, so whenever the rebound takes place you will actually be able to gain the most from your channel trade and from channel entry. So with this being said, that's all for Workhorse Group. Indeed, the company did show very nice behavior on the grow in the summer. Now it's a little bit stronger correction. Could be a second leg, of course, of corrective move. If this is going to happen, as we just discussed, moving average 20 will again start declining, but still it's very possible that both slower moving averages 250 will work here as a strong attractor, especially given the fact that the distance between them is here bigger and bigger. So with this being said, good luck with Workhorse. Do not forget to subscribe to our channel. If you're first time watching this video, press the bell button. This way you will not miss our new videos and new interesting discussions for US-based stocks.